Hello traders, welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado and it's a pleasure to check some of our wave counts here with you. We are looking this week at the euro, the S&P and oil on this weekly video. Don't forget that you can sign up on Elliott Wave Street to unlock the access to all the instruments we cover. Alright traders, so let's start. Great, here we have the euro, which has been moving up, and we were able to buy it from this area. We went long at the 106.80 on the membership, and we were able to capture this beautiful leg up. Now I want to talk about the price losing momentum, because when you master this simple principle about a slow and fast price action, your trading is going to change forever. Fast price action is when we have the directional move, is when we have the price moving in this direction, and the big guy, the set of 10 institutions who are responsible for most of the market movements, are not doing anything. They are not selling. Then, when the price starts a cycle of a sideways consolidation, usually this one after the wave 3 is the wave 4, and it's going to take some choppiness. It's going to take a while. The price continues higher, but it's losing momentum. And you can visually see on your chart the speed of price. When the price is reducing its speed, is because another force is pushing the price the other way. And makes sense. Let's suppose that you are an iPhone reseller, as I was telling my clients this story today. And you are an iPhone reseller in your town. You are the only one selling iPhones. And you start selling each unit at $200. And then you increase the next day and you sell a bunch of iPhones. Wow, that's cheap. The next day you increase the price to $500, and still you have some good sales. And the next day you increase the price at the $15,000, $15K. I say, nobody's coming. Nobody's buying the iPhone at this price. Of course, it's too expensive. The same happens with any instrument. When the instrument travels so much in a short time in a short time period, of course, it's too expensive, and it's time for a corrective wave. So one way to see that the deceleration in the price intention or the price trend is by using any indicator that you like, or just with price action. But if you need the indicator, it's completely fine. Look at the divergence on this MACD. Divergence means that the price is going up and the MACD is going down. And of course, this could be any asset. This could be this euro, or any asset. And something that I tell my clients, and that you can find in our momentum course that is part of the membership, is that when the MACD or any indicator is the intention from the big guy, and the price is the intention from the retail trading. So a lot of buyers at the highs, of course, not good. This divergence tells that soon the euro is going to start a corrective leg. So let's get ready for that. Let me show you the daily chart from the wave count perspective. Let me know what you think about this fast and slow technique. Please comment here on the video, on the comment box below the video. What do you think about the price speed? Is something that you have been thinking about before? What do you think? Do you agree? Do you disagree? Let me know. Okay, so traders, here on the daily chart, the acceleration that we got last week on the euro was impressive. So I'm thinking that this could be the impulsive leg. But the beauty of Elliott Wave is that First of all, we can believe that price is coming up here or is going down here. And that's fine. And you will say, yep, up or down. So subjective, yes. But what if I show you how to find if the price is going here or if it's going here? Wow, that's something that is going to change your trading forever? Of course, right? Of course. And that's the type of work that we do on a daily basis on the membership, solving these little questions about how to find the right direction. So let me explain this one here. If the price is moving up fast on this daily chart, we know that the intention is to the upside. So far, what we have is that the price wants to come up here to the previous high. That's the highest probability. The next step is the confirmation. The confirmation that price wants to come here. And that's the easy part. Here, we will be looking just for the ABC traders. Just an ABC. ABC, it's a three-wave sequence where the last leg loses momentum. This will be the wave A, this will be the B wave, and this will be the C leg. ABC. When the price is losing that momentum, we can have everything, traders. We can have everything in place to start buying and following the move up. On the other hand, if the reaction during the C leg is strong, we don't have that edge to buy the euro, and we know that the liquidity is going, that the price is going to grab this liquidity here, right? So of course, the main trade will be selling here after the B. If it's an ABC, we close the trade and we go long to grab this liquidity. If the price moves down fast, we can capture the leg down. So that's the logic, because of course nobody knows with a 100% probability which direction is gonna go the euro, but is going here or here. Those are the only two liquidity points that we can expect. So this will be a little bit more for the longer term, but the point is that I'm considering labeling this as a wave 1 and getting ready for a wave 2, because the price speed is telling that the direction is to the upside. Of course, after the confirmation, we can get ready for the continuation higher and we can follow the trend. And that's the beauty of the Elliott Wave Theory. Don't you think that this is a great approach? It's not like saying, yes, it's coming here, and that's my final word. No, it's understanding based on supply and demand, step by step, how to find the next direction. Of course, in the meantime, we can trade it. So let me know in the comments, what do you think about these concepts? I would love to hear your opinions. That would be great. Let's have a look at the S&P. The S&P also has been working fantastic, but it's a fact that it's also losing momentum. So we are getting closer, traders, to the market top, not for a market reversal. I believe the S&P is going to continue higher, but for a deeper corrective wave to the 500 area, for example, could be a nice level. When we are trading, we need to have a discount. So impulsive leg, we wait for the corrective, we buy it. Impulsive leg, we wait for the corrective, we buy it. But of course, when we are here at the market extreme, we don't have anything for that swing trade. Of course, for scalping, for day trading, there are plenty of opportunities inside. So in this case, we are at the market extreme. Soon we're going to find the end of the wave 3, and we are going to start working on the other direction. This is the Dow. The Dow also has been moving up as well. We have the Dow pushing higher. We have the Dow gaining more momentum, so that's pretty interesting as well. But the same story. Soon we're going to start seeing the corrective leg as well. So you can see that is exactly the same path. Let's go back to the daily chart on the S&P to show you something interesting. We got this target before, so this target has been hit. Of course, there are plenty of stops here, and the next level will be this one here. So that's our final destination, at least to complete this wave 1. So wave 4, wave 5, and we will see what's next here. But the good news, traders, is that we have been able to capture this whole leg up. And if you have been following here on this YouTube channel, the analysis, you have been seeing the step-by-step that we have been planning, and we have been following the trend on the S&P, and that has been working fantastic. So thanks to these little tricks and tips applied on the Elliott Wave Theory, there are little concepts that you can add to your Elliott Wave Theory, like fast and slow, and others that you can learn in the membership, that are going to change your life forever, that are going to change your trading forever. So it's a great experience understanding Elliott Wave from a perspective that really works. And let's have a look at oil. Oil is a great setup for this week. It's going to be extremely simple. I want to sell it. I want to sell the oil market. The CL could be here. If the price rejects here, will be my first entry point. And the second one, in case, or the first one, we don't know yet, if the price comes here and rejects. One or the other or both. If the first one triggers and the price continues and we have a stop loss and we have to trigger again, we will do it again. It's part of the trader's process. All right, traders, what an exciting week in the markets. If you want to learn more about our membership, please join us on ElliottWaveStreet.com. Under the membership tab, you will find all the details about this fantastic membership. You're going to get education. You are getting also the daily reports. Pick your plan, start your trial. And if you have any questions, let us know. Here is our WhatsApp number. So here we can help you, or the email, with any questions, because we are here to improve your trading. That's our promise. You sign up for this membership, and trust me, you are going to change your trading forever. But if you have any question before signing up, let us know here in the WhatsApp number or the email, and we will check together what we can do for you to improve your trading. Thank you, traders. Have a fantastic trading week. I'll see you soon. Take care. Bye-bye.